Hey traders, how's it going? This is Scott Schneider from the Live Trading Suite over at the Future Room, bringing you a shadow short on Monday, March 24th, just after the close of what was a gap and go on the broader markets in the ES and the NQ. We are looking at the ES daily candlestick chart, and I just want to highlight how anyone in the past 11 trading sessions that went short and did not cover is underwater right now. And I think a lot of what we saw today, based on the structure of the profile, was, short covering older business. I don't know how much new money got involved today. That's, we'll find out in the up and coming days if this is anything more than some old business. Now, if we take a look under the hood and check out the internals, you'll see that this was, all 10 of the 11 sectors that make up the S&P 500 were green from the open. And the reason why that's significant is because it was a gap up open after a spike on Friday afternoon. So it was, to not just be open from Friday's close, but also be open from the opening bell this morning is significant. And the only sector that was down was utilities, and that's only 2.4% of the S&P. Now, it was noticeable that there wasn't a whole lot of extra tempo as the day went on. So we will have to see if new money buyers and momentum buyers are going to come in. But we did have a positive breath, 3.91 to 1, NYSE, 4.02 to 1, NASDAQ. And the weighted AD positive the entirety of the day. So if we head back to this daily candlestick chart of the ES, one thing we can look at is, as long as we stay above this 57.91, I think any pullback that doesn't take out 57.91 and come back into this range over here, is probably a nice pullback buy, with good managed risk. And I would be looking at the, I think the next signpost to the upside is going to be the 58.50 area. The 58.53 is the high of the 6. That's the next, daily high that the price would need to get above. And so we will see. If we take a look at the profile, well, this is also, so this is where we close today. This is a day, the candlestick chart of the ES, and this is that 58.50. So it's, if you look at the volume profile, this is from, the month of March. Pretty big. And so if we look at the profile, we'll see that today, it kind of has the P. You got the stem, but I wouldn't be too worried about it. You got the stem from A period, which is what you would want to see. And then we do have excess in M period at the highs, and we could, we could consider that a spike, but we did go away from it. But that is, that did happen at the end of the day. There's not enough time in the day for that to get verified with time acceptance. So, spike guidelines are appropriate. But we really did just kind of two-sided trade up at these higher levels. But what that did do is value, which is 70% of the day's activity today, is significantly higher than all the value that we saw last week. And so, I called it a gap and go, and that's because, this is Friday afternoon's session. We had a spike at the end of the day in M period, and that spike had the most positive outcome, which is a gap up. So then you can see we gapped up about, from 57.22 and a quarter to 57.75. And from the open around the 57.82 area, we did not do anything to repair the gap. So we still have excess below us. We still have a gap below. And all the selling that was able to really take place today was two-sided trade. We had a little bit of a pullback in K period around 2:30 p.m. Eastern time at 57.95. But they didn't even come into the stem of these A period single prints. And there's a lot of them. I mean, that's a lot of excess in A period. So, if price does come back into there, that could use some repair. But I think the context of what we started this video with about how all of these market participants who were not, positioned long, who were positioned short or adding into their shorts, they're not in the best situation right now if they did not cover. And if price continues to advertise higher, it's just going to continue to get people that to the left of us also, might not have covered yet into trouble. So I think, sometimes, the reason why I bring that up is because I mentioned the P formation, which is a market profile term that kind of defines not the best structure. It's usually from short covering, and it can weaken a market if it's not met with new money buying or momentum buying. But I think in this situation, based off of how high value was today, that there's still a possibility that that could continue to happen. I do think it'll be interesting if we can open above the 58.19.75 area. That is going to be what buyers want to see most, is that tomorrow when we open, we're above 58.19 in the ES. And if so, then we could look up towards 58, 47, 58, 56 area. Have a wonderful evening, and I hope to see you in the room. Peace. Hey, this is Scott Schneider from the Futures Room over at ShadowTrader's Live Trading Suite. If you enjoyed this video, please hit the like and subscribe buttons. And if you'd like to trade live with me in real time, please click the link in the description below. Have a great day and happy trading.